Hey, Keith here for Am I Rich? And oh man, my throat, I think something about daylight savings threw me off. But anyways, today we're talking about a cheap potential stock. That is Norbord. Norbord, if you haven't heard of them, well, they make wooden boards. Yes, wooden boards, the most exciting company around. And why why is this company exciting about wooden boards? Well, their ticker symbol, OSB, stands for Oriented Strand Board, which is what they make. That's their specialty product, and they are the dominant player in the world for Oriented Strand Board. They have factories or mills throughout North America and Europe, and that gives them a real advantage because they have the equipment that can produce these oriented strand boards the cheapest. They also make particle boards and a few other type of wood paneling type of products, but that is their main product. Now the current stock price is at $35.60 Canadian, and it's also on the New York Stock Exchange, but we'll go Canadian because it's based in Canada. And then that gives it a PE ratio of 8.3, and which is dirt cheap. I mean, this is really cheap for most companies, especially with one with a reasonable moat like this one does. Now, its forward PE ratio is 10.4, which does suggest a slowdown in its growth, and that's probably the case. I think their management even thinks it probably will grow a little bit slower than the previous year because the previous, like 2017, 2018, they did a lot better than expected and they had a lot of extra cash on hand. So they felt like, it's not going to be as good this year. So that's why the kind of a slowdown. But generally, this is a very stable production-wise company. They have risks as far as how they pay for their materials and in the housing market that they sell to, but that's another thing. So the price to book ratio 3.7, that's a little bit high. They do have this machinery like I mentioned and the locations, so it might, I don't know if it's fully justified, but it is what it is. It's not outrageous, but it is a little bit high. And then their dividend, currently their dividend is about 4.5%, but there's a caveat to this. Really, their dividend is variable. So they basically pay out, every quarter they decide how much they're going to pay out, and this really depends on how well, their business is doing. So last year they paid out probably 4 times as much dividend as they're anticipating right now. So at this current stock price, if you had that same dividend payout, you'd be getting like a 20% dividend almost. And if you go to some websites, you'll still see it say like, I don't know, like 17% dividend or something. So they do pay out big dividends when they do well, but it's probably a good thing because when the company just kind of has struggles because of the housing market or something, then their dividend can go to zero and they don't have to worry about that aspect. So kind of an interesting way that they do it. And then their 5-year growth rate, which is probably one of the lackluster things and maybe the reason why the price to earnings is not that high. Its 5-year growth rate is 4.9%. So much slower than the industry average of like all companies. But their focus on this company is really just to work on these boards, wooden boards, and nothing else, and they're not trying to dip into more growth areas. They have a very stable kind of position in the market, and they might pick up a mill here or build a factory somewhere else, but generally they don't do a lot of that, and so you don't see the growth that you would with a lot of other companies. And that's also probably one reason why they pay out a lot of dividend. And they did pay out a lot of dividend last year because they had a lot of extra cash. So if you like dividend stocks, this one, it's a volatile dividend. So that's kind of the one thing that's weird about it. But it does generally pay, and if right now it's estimating 4.5%, but they often pay out more, you could get a pretty decent return for the dividend. Now, why is the stock cheap in my mind? Well, you go back into history for this company, and what really happened was they have had a very stable position in this market for a long time, but their price or income has varied with housing market. So in the early 2000s, as there was a huge boom of selling houses in the United States with ridiculous mortgages, they did really well, and their stock price was, I think, around the $150 mark at one point, and they basically were making tons of cash, doing just fine. And then the housing crisis actually occurred in 2008, maybe started in 2006 kind of thing, and that really dropped their company's profitability. So they went to, they were losing money, and they didn't have cut their dividends. But by 2010 or 2009 they had already seen that likely the housing market was going to recover, and they felt like they would do fine in the future. And so it was the case. I mean, they didn't really anticipate the housing crash, but they were able to get through it. They did fine that way. They have a pretty good free cash flow generally. So yeah, then they've been growing ever since, since the crash, the big Great Recession. There's been ups and downs, but generally their stock has been going up. And as of late, it did drop, and there's a few factors to that. It dropped in the kind of last half of 2018. One factor was that all stocks were expecting some kind of crash or slowdown, global slowdown, and so many stocks, the majority of stocks, had their prices drop. Another one was housing starts seemed to be slower than expected for a lot of big housing companies, and that's something that dropped Norbord stock as well. And then, they paid out a huge dividend, and there's also usually a discount that goes into stock pricing when dividends are announced, big dividends are announced. So in this case, you had all these things kind of cumulative effects going into it that kind of dropped the price. And there was also trade war stuff, or tariffs talk with Donald Trump back in 2018 about wood from Canada and things like that. And so whether that's a direct impact on their business or not, because they usually get more localized product, but it still plays a role in the psyche of people with the stock price. So they had a massive drop in their stock price. It went from like almost $50 down to now it's at 35. It really hasn't gone up much. So because of that, I kind of see this company, it's a steady Eddie company. It has a nice potential dividend, and housing startups actually are not as bad as expected if you look at the more recent data in the United States. So it does seem like the housing market might not be as in bad of a shape as expected. People are buying stocks again, so there's a lot of upside for this company. And if they just report 1 or 2 quarters of really good earnings again, and the housing market doesn't seem like it's going to collapse, I see this stock as being well positioned now because it's so cheap. And it's under the radar because a lot of people aren't thinking about wood panels. So yeah, so my take on this, I think it's fairly cheap right now. I would probably consider it a buy. I don't know if it would be a long-term hold. I mean, I did a video, my last video was about 3D printing kind of taking over the housing construction market. So I don't know, in the next 10, 20 years if this would be the greatest company, but in the next 5 years I see them still having their moat and still being very consistent. And because of this stock is probably the cheapest it has been, maybe in 10, 15 years relative to its intrinsic value. And it's not that bad of a company. They generally make it through rough times. I don't know that the housing crash or housing downturn now would be as bad as it was in the Great Recession. So I don't know what you guys think. Let me know in the comments, but I think this is probably a buy right now. It seems like a very interesting company. I mean, who doesn't like wooden boards? But in all honesty, yeah, that's my thoughts on this stock. Let me know whatever you think. Thanks for watching, and we'll talk to you in the next video.